Hello there. Welcome back to Introductory Accounting L4. In this video, we want to look at a question from the recent question paper of June 2024. And this question is on preparation of the statement of profit or loss. So our question is the following trial balance appeared in the books of Mabele Traders on 31 May 2022. On the required part to draw up the statement of profit or loss of Mabele Traders on 31 May 2022. So this is the question that we're just going to look at according to this video. The other questions, I will see them in our next videos to come. So this question has got 23 marks, and we should take note. And if you go to the information that you are given in the question, we are given a trial balance of Mabele Traders on 31 May 2022. So this is the balance sheet section column, debit, and we've got credit. So you can go through everything in terms of the elements of that trial balance as you prepare to start answering the question. So if you go down, you'll see that this is the trial balance that we are given, a lot of information that is inside that you need to comprehend and try to identify in terms of their classes. That is to identify if it's an expense, it's an income. That is what is necessary according to this video. So this is what we have. So we can now as well try to see beneath that trial balance, we are given additional information as we see, which reads the merchandise was valued at 272,691 rands after a physical inventory check on 31 May 2022. So this is the final information that we are given according to this question. So the question, remember, needs us to prepare the statement of profit and loss, so we can as well try to go to the other section and try to see what do we have according to the other section. So if you come here, you see that we've got the statement of profit or loss of Mabele Traders for the year ended 31 May 2022. This is our answer section. So obviously the figure that we are going to start with there, or the elements of that statement of profit or loss that we are going to start with, is going to be our statement of it's going to be a revenue. Revenue is going to be the initial element that we are going to enter them. So we are going to say revenue. So revenue figure, obviously, we are going to get it in the trial balance. So we go back to the trial balance and try to see what figure do we have in terms of our revenue. So if you come here, obviously, we find those figures under the nominal account section. So if you come here, you see that revenue is here, and the amount that we have is 721,836. So as we can try to enter it as such. Now we have 721,836. So we can as well try to see what we have next. Right. If you come here, you will see that after revenue, we are going to the cost of sales section, whereby we are going to start with open inventory. That is at the beginning of the period, and open inventory. We find it in the trial balance. That's where we find open inventory. But closing, we always find it in the additional information. So according to our trial balance, our inventory on 1 June 2021, which is at the beginning of the year, is 41,695, which is going to act as our opening inventory. So remember, we also have to put that heading of less cost of sales to indicate that we are now under cost of sales. So we are saying less cost of sales. And then under cost of sales, that's when we are going to use the formula opening inventory, add purchases. We subtract purchase returns if they are there. We add carriages inwards if they are there, or carriage or purchases. We add customs duties. We add there, or import expenses. We add them here, and then we subtract our closing inventory to get our cost of sales. So this is the formula for cost of sales. So depending on the element that you are given, you can just substitute here. So you're going to start on opening inventory. So here we're saying opening. And the figure that we got there in the trial balance was 41,795, 41,695. Then after that, we are going to check for purchases. Check for purchases. Right. I believe that we would purchases, which is 542,874. 542,874. And we check if you put our carriages, any carriages that we're going to add to the figure for purchases. Carriages, we have it again, 13,457 carriage on purchases. But if it's a carriage on sales, we don't put it under cost of sales. Carriage on sales is put under less expenses. So this one we ignore it. We check if there are custom duties import. We've got import checks, 10,984. So those are some of the expenses that we are going to include. So we are just going to say purchases 542,874. Then we add our carriage on sales, carriage on purchases, and then we add import tax. So these are the figures that we are going to enter there. So we are going to say plus. We are now here. We are saying plus purchases. Plus purchases. With a figure of 542,874. And also, we are seeing that we have got some carriages, sources plus carriage and purchases. We can also call them carriage inwards. It also means the same thing. Carriage and purchases, the figure that we have for carriage and purchases is 13,457. Then obviously, we now have also our import tax, which we are also going to add. So we can say plus import tax. Import tax, we've got 10,984. Right. So this is what we have. So beneath that now, we now are supposed to calculate the figure for cost of sales and put it in line with cost of sales here. So we're saying 41,695. We add our 540,874. We add 13,457. We add 10,984. And then obviously we now have our closing inventory, which we are supposed to subtract less closing inventory. So we can only get that figure for closing inventory in the under the balance under the trial balance in the additional information. So under the additional information, that's where we have our closing inventory, which is 272,691. So we can just go and enter it as such. You're saying 272,691. And we are saying less, so we are subtracting it. And then we close. Remember, I want to calculate the figure for cost of sales there. So having done that, we can now say 41,795 plus 542,874 plus 13,457 plus 10,984 minus 272,691. Then you get your cost of sales. And then the correct cost of sales figure that you are supposed to get there, 336,390. And we are saying less again. So we are subtracting. So if you say revenue minus cost of sales, you get your gross profit. Depending on which one is bigger there. So you can only get gross profit if revenue is greater than cost of sales. Like in this case, revenue is greater than cost of sales, so you're going to get a gross profit. But if revenue is less than cost of sales, it will be a gross loss here. And we show it as a negative figure here. So if you subtract 721,836 minus 336,390, you get your gross profit of 385,517. Correct. And then we go to the next category where we are saying other income. We leave it blank again and list the other income that you are seeing in the question. So we go to the nominal account section, obviously. That's where you're going to identify these incomes. So if you go down, starting from where it is starting, going down, checking for incomes. Let's see. You've got rent income here. And you should take note that all incomes are shown on the credit side of the trial balance. And all expenses, we see them on the debit side of the trial balance. So in this case, we've got rent income, which is on the credit for 2021. Let's try to identify another income. We have interest on fixed deposits. It's an income again, 32,187. We are seeing where they are paying on the credit side. Commission income is an income again, 53,540. So we just pick these three. These are the incomes that we have there. And you go down, you see that we don't have any other income that we have there. So those are the incomes that we have. So we go there. So we are now saying under other income, we are now saying rent income. Rent income, we have got 4,021. And then we have got interest on fixed deposits. Interest on fixed deposit, we have 32,187. And then we have commission income. And the amount that we have is 53,540. Right. So this is what we have. Then obviously we are going to add them 40,021 plus 32,187 plus 53,540. And then the total that we are supposed to get is 130,748. And this one is a positive. We are adding other income. So yes, we leave it like that. Then we add now. So here obviously we close, show that we have added there. And here we close. Now we are saying 385,570 plus 130,748. Then you get your total here, which is supposed to be, let's try to add and see if you get correct answer, 516,265. $516,265. And that figure, we call it the gross income for the year. Then beneath that, we are now going to the operating expenses, or just say less operating expenses. Here we are saying less operating. Less operating expenses. And then on operating expenses, we are going again to the nominal account section and try to identify which expenses do we have in the question, obviously. And we're saying all expenses, we find them on the debit side of the trial balance. So we're going to pick the first one, carriage on sales. Carriage on sales becomes the first one for our salary, for our expense. And then we check the next one. We've got telephone expense. It's the next expense that we have. And then we'll go to the next one. We've got credit loss, then expense again. So let's just pick these three. Wages and salaries, 90,756. And then we have got telephone expense, which is 2,142. Then we've got credit losses, 4,628. And obviously, we have also carriage on sales here, which is 22,541. So we can pick those four and enter them there. So if you come here, we are seeing the first one that we picked there was carriage. Carriage on sales. Carriage on sales, and we are having 22,541. And then we have our wages and salaries. Wages and salaries, we have it is 90,756. We've got telephone expenses, 2,142. And we've got credit losses. Credit losses, we are saying is 4,628. We also have to take note that a credit loss is when we sell goods on credit to our customers and they have become our trade receivables or debtors. So when they don't pay back our money, you see that we'll never receive our money from those customers. Maybe the customer has died. That amount become a credit loss. So this is what we mean by credit losses. So these are the ones that we picked. So we can go again and try to pick other expenses that are listed there. So remember, we are now on credit loss. We have got interest expense, which is 3,210 again. Interest expense, and then we have stationery, 1,627. And then we've got donation, 2,589. Those are all expenses. But for stationery, it depends on the question. Other questions, they might give you a balance of stationery as closing inventory here. They'll give you inventory 272,691, and then they give you another figure for stationery. When you have such a scenario, it means out of the stationery that was bought, all of it was not spent. Because what is an expense is what was spent as stationery. So in this case, we are given it in the trial balance, which means this is what was bought. And they are silent in the transformation, which means everything was used. So we assume that all of it is expense. But if you've got something that is remaining at the end of the period, we have to subtract it from this figure and remain with what was used. That is what will be the expense. So this is what we have. So we're just going to pick these figures and enter them as such. So we now have three other expenses. That is interest expense, 3,210, stationery, 1,727, donation, 2,589. So these are the three remaining expenses that we have. So if you come here, we are now saying interest expense, and the figure that we have for interest expense, 3,210. And then from interest expense, we've got stationery. We've got stationery, which is 1,627. Donation, 2,589. Then we've exhausted all the expenses. Now we can add now to get the total figure for expenses. So now here, get close. So if you add everything that is inside here to get the total, you're supposed to get a total of 127,493. And obviously, we are saying less operating expenses. This is a figure that is representing operating expenses. And we are saying less, so we're subtracting. So we are now saying gross income minus operating expenses. You are supposed to get your net profit or loss. So if our gross income is greater than operating expenses, we are going to have a profit like what we are having in this scenario is going to be a net profit. But if our gross income is less than our operating expenses, it means we're going to have a negative figure there, which is going to be our gross loss. And we show it in brackets so that it's a gross loss. And on the description part, you write gross loss. So in this case, if you say 516,265 minus 127,493, you are supposed to get your net profit as 388,792. $8,792. And this represents your net profit for the year. So the question is added here according to this video was the preparation of statements of profit or loss. So this is what we gave guys according to this video. We meet again in the next video. As for this video, I'm signing out.